investing and making money with money.
You're a Hawkeye!
Episode 190 is about having a basic understanding of our tax system. Every year, anyone that makes money is required to file a Form 1040 with the IRS or the Internal Revenue Service to determine how much tax you owe the state and the federal government. Not all states have income tax. Alaska is the opposite. Alaska shares oil revenues with certain citizens. An income tax system is an essential component of a country's economic framework. Income tax supports the functioning of government institutions and helps fund public goods such as education, healthcare, transportation, and military services. The primary aim of an income tax system is to provide a continuous and income, dependable source of revenue to support societal needs effectively. Hawkeye, before retiring, was a registered tax form preparer, and he had a tax service business for over 25 years. So he wants to explain the tax system to you. Here goes.
Welcome to Hawkeye's Hangout. How are you doing? Yeah, the tax system is not all that complicated. Even the IRS will be the first to tell you that there are exceptions to every rule in the Internal Revenue Code. Tax codes change every year. However, if you want maximum benefit from the system, you will want to employ an enrolled agent to prepare your tax form. This video is just a summary of the system and is not an effort to aid you in preparing your tax forms. There are websites such as taxact.com that you can use if your situation is not that complicated. Actually, I do not endorse TurboTax or any product from the Intune people. They suck. Okay, who must file a tax form? Anyone who has earned income of $13,850 or more, if you're single, $27,700 or more if you are married, $400 or more if you're self-employed. Now, why is that so much different? Well, if you're self-employed, you take all the money that you made during the year, you subtract what you spent to make money, and whatever's left over is how much you pay tax on. You should include any income that you earned from stealing or scamming people. Yeah, right. 1040 form must be completed by anyone and everyone who files. You have a beating heart, you are required to file a Form 1040. Be aware that there are several Form 1040s available. You got your 1040 Easy, you got your 1040 V as in voucher, you got your 1040 ES as in estimated payments, and then you got your 1040 SR. That's the one I do. It's for senior citizens. There's 1040X. If you made a mistake on any of the other 1040 forms, you file a 1040X. Form 1041, that's for your final tax return. The first part of Form 1040, they want your personal information such as name, address, marital status, social security numbers, your children's name, and their ages. The IRS wants to know if you want $3 of your tax payment to be donated to the Presidential Campaign Fund. Say yes. It will not affect the results of your tax return. Okay, the first thing you got to do is add up all the money that you made for the year. January 1, December 31st. Do a different tax year if you do, but you got to make arrangements. Add up all the money that you made. Subtract your adjustments, such as your standard or personal deduction, your dependent exemptions, and deduct the amount of tax-deferred retirement contributions. This is a good thing. Standard deduction is a fixed amount depending on your marital status and age. Personal deductions is the money that you spent for education, medical, mortgage interest, state and local taxes, gifts to charity. And actually, there's a lot more deductions available, but those are the most common. Okay, you either take the standard deduction or you itemize. Standard deductions, fixed amount based on your age and marital status. Tax deferred income goes into an IRA or 401 account. Tax deferred income because you take it out of your paycheck now, you put it in an account, and then after you get old, like me, no longer working, then you take the money out, and then that's when you pay tax on it. Hopefully you're in a lot lower tax bracket when you retire than when you were working. If that's not the situation, then you want to put your money into a Roth IRA. There are penalties for early withdrawal. So, wait till you get to your designated retirement age, which is kind of shifted. Anyway, you subtract your deductions from your gross income and you end up with AGI, adjusted gross income. The AGI is the amount that you use to calculate how much tax you owe. Now, at this point, you add up all the money that you've already paid, like money that was taken from your paycheck or your 1099s. If you're self-employed, you probably made some estimated payments. And then you take that amount deducted from the tax owed. And the result of that calculation determines if you're going to get a refund or you still owe. After you determine how much you owe, then you calculate your tax credits. Now, tax credits are $1 per dollar deduction from the amount of tax owed. What that means, if you have $7,000 in tax credits, you already have $7,000 of tax paid. Tax credits are subtracted from the amount owed. You should be aware there's a difference between tax credits. You should be aware that renewable and non-renewable tax credits are not the same. In the future, I hope to do an episode on investing, making money with low-income housing tax credits. It's a great thing created by Bill Clinton when he was president. Tax credit means to make money with money and reduce your tax obligations at the same time. What a deal. Don't forget to sign your tax form. Back to the new hostess, Hawkeye's Tales.
Good job, Hawkeye. We want to let everyone know that all information is deemed reliable, however not guaranteed. Do not forget to click on the black stray cat in the lower right-hand corner to subscribe to Hawkeye's Tales and Trails. Hawkeye's Tales and Trails. Until next time, have a safe, happy, and prosperous